Hey traders, Gavin from Options Trading IQ here. I just wanted to do a quick update on some wheel trades and let you know how they're performing during this market correction. Before we get started, just a quick reminder, everything discussed is for educational purposes only, is general in nature and does not take into account your personal circumstances. Okay, so first up, EWA. This one's been going on for a couple of years now, so started back in Feb 2023. You can see the stock has basically been flat in that time. This trade's up about 20%, about $8,000, so doing pretty well. These are the share purchases here at sort of 23, 24. And at the moment, I've sold some covered calls, not fully selling the covered calls. I've still got 200 shares uncovered to allow a little bit of extra upside potential. And I've sold those at the 25 strike for October. That's basically the value to close them out at the moment. They're still out of the money. So that's basically all time premium that will just decay over the next 6 months or so. So plan here is to just continue holding. Unfortunately, this one is a lot lower in liquidity than it used to be. So it's a little bit trickier getting filled on the options. It's not too bad. You have to sort of use a pricing calculator because when I entered these ones a couple of weeks ago, when I sold these calls, there was no bid or ask price. So I had to kind of find an options calculator on bar chart, put in the parameters of the underlying, the volatility, days to expiration, dividends, etc. And it gave me the estimated price, and I was able to get filled pretty close to that. I'll actually be reasonably happy if these get called away because of that lack of liquidity, and I'll look to move these into some Australian shares. The added benefit of that is that they have franking credits on the dividends, whereas this one doesn't. This is also exposed to currency risk, which I do hedge a little bit, but it's not perfect. And there's fees, of course, associated with this ETF, with those fees going to BlackRock. So I'd rather just invest directly in some Australian shares. So like I said, happy for this one to get called away. If it doesn't, I'll just continue selling those calls, generating option premium, collecting the dividends, and just biding my time, basically. If you look at the chart, it's been a good one. I've sort of been able to sell puts when it's been low, sell calls when it's been high, and it's been reasonably range bound for a couple of years. So it's been a pretty good one for a wheel trade. EWU expired worthless. This was a cash secured put in January. I've had this one been going on for a couple of years as well. I was assigned on some shares at one point, but most of the puts have been expiring worthless. And even when I owned the shares, a lot of the calls were expired worthless, and then eventually got called away. I've actually been a bit disappointed not to be still in this one because European shares have been doing pretty well recently. So I may look to reestablish this by selling some more puts at some point. But overall, you can see that the performance of the stock price is about 15%, and this trade was up about 24%. EWW, the Mexican ETF, has been okay, particularly considering the volatility and all the trade, war, tariff news. The stock is a little bit flat, slightly down. I'm positive on the trade, which is good. You're going to find that with most wheel trades, it's going to outperform unless the stock has a massive rally. Even if the stock's down a lot, the wheel trade might be down, but it'll be down less than the underlying. I think there's only maybe one or two examples, this one, where the stock's had a big rally. I'm still positive, but underperforming. Most of the other trades are outperforming the stock. So I've got some puts here that are going to expire this week at the 47 strike. So those will expire worthless. I may look to resell some more, maybe for the June expiration. I've also got covered calls up at 52, which are currently in the money. Plenty of time premium still available in there. Again, I'll just bide my time, wait. If the shares get called away, that's fine. I'll look to reestablish later on or move to a different underlying. So that one's looking good. EWZ's been a tough one. The stock was down about 50% at one point, currently down about 24%. It's had a nice little bounce back. And you can see here I'm down, but only down 3%. So a lot less than if I was just to buy the stock. The initial assignment occurred at about 32. I sold some more puts at 28, got assigned there again at 28, and then sold some October calls up at 29. These 500 shares are currently uncovered at the moment. I'm going to wait for the stock to get back up closer to 32 or even 30 before I start selling calls on this tranche. And I've got some current open puts for June expiration. I'll be happy to buy some more at 23. So those puts at 23, the calls at 29 are both out of the money. So that's all time premium there. So it'll just continue to decay away. But the stock has been making a pretty reasonable recovery. So if we go and look at the chart, you can see here's the big drawdown from about 33 all the way down to 22, but it's recovering nicely now. We'll just zoom in on the last 6 months. And we can see here, really nice recovery. We've got the 50-day moving average was trending downwards, started to flatten out here in Feb and is now turning upwards. And we've got the stock trading back above the 50, back above the 21. Today crossed back above the 200. So looking a lot more positive there. I'm pretty happy to keep some of those shares uncovered. See if it gets back up towards this 29 level at some point in the next 6 months, and then maybe I'll start selling calls again on that underlying. FXI was another one that had a massive drop. I think this might have been the one that was down about 50% at the moment. It's recovered really nicely in the last 6 months, so only down 14% at the moment. You can see this wheel trade is up 12%. The initial assignment, I got assigned almost right near the top at 45. Bought some more shares at 28, bought some more at 27.85, bought some more at 24.85. Continuing to sort of dollar cost average as the stock dropped. Currently, I've only got 3 of the 400 shares covered, and that's at a 30 strike expiring this week. So 300 of those are going to get called away. That's basically these 3 lots here. So I'll make a profit on each of those lots. There's obviously been lots of put sales, call sales that have expired worthless, dividends, etc. You can see here, lots of dividends, lots of option premium that I'm trading around that core stock position. So the majority of the profit has come from the option premium and the dividends rather than the stock price. But you can see a really good example here where the stock's down 14%, I'm up 12%. So that's the power of the wheel strategy. Sometimes it does take a little while to play out. This trade was down significantly at one point in time when FXI was down about 50%. If we go and look at the charts, we can see beautiful uptrend now, bouncing off that 21-day moving average. We've got all the moving averages trending upwards. And if we go out to sort of when the trade was started back in 2022, we'll look at a weekly chart. Might even have to go further than that. So I was assigned pretty close to the top. I did get up to about 50 at one point. I was assigned here at 45, so very, very close to the top. Dropped down to just below 20, so well over 50%. I can't remember if it was on this drop. I think it might have been this one where there was a cover on the Economist magazine saying that Chinese stocks and China was basically uninvestable. So for me, that was like a great contrarian indicator. Took a little while for the stock to recover, or the ETF, but now looking a lot better. At the time when I sold those 30 strike calls, I was pretty happy to get rid of the stock because it had been a pretty rough ride and pretty risky, I guess, investing in Chinese shares. But in hindsight, I kind of wish I hadn't sold these ones now because obviously there's been a big loss on those calls. I could look to maybe roll them, but again, pretty happy to take the profit, let the shares get called away. I can always look to sell more puts or move to a different underlying. I've still got the 100 shares here at 45. If it gets back up to sort of 42, 43, I'll look to sell a covered call on that last tranche of 100. TLT has been another one that has been down since I opened it in mid-September. You might remember the video that I did when this was opened, down 7.5%. I'm basically flat on the trade. This is a slightly bigger position. I'm looking to build more defensive assets as the market was sort of looking like it was topping out or getting very, very expensive. I was starting to move to some less risky underlyings. I started this one as a covered call, actually. So bought the 200 shares, sold a long-term covered call against it, almost a year. That was the initial video I did. Sold some more puts down at 92. They're expiring this week. Looks like they may get assigned. That's totally fine. Happy to take the dividends on those shares, and I'll look to sell out of the money covered calls against that position, that tranche, and further enhance the option premium from the overall position. Sold some more puts down at 85 strike. Those are for August expiration, so a little bit of time to go there. Again, these ones are both out of the money, so that's all time premium that will just continue to decay away, provided we stay in between 85 and 100. If we look at the charts, for the last few months, we've really been trading between a range of sort of 94.5 down to 84.5. I was tempted to sell some more puts when it was down here at this low. I wish I had have, but it's been a nice recovery. It's kind of sitting in the middle of the range here. I'll be looking to sell puts if we get back up to the mid-90s. If we happen to go back down to the mid-80s, sorry, did I say puts or calls? I can't remember. I'm going to be selling calls if it gets up to the mid-90s. If it goes down to the mid-80s, I'll be selling some more puts or just buying stock. And USO, a fairly recent trade. I've had a couple that expired worthless. So started this back in October, sold some 66 puts for January expiration, sold some 67 puts for the April expiration. Those were closed out at one point. I might be missing a closing transaction here somewhere, but sold some April 72 puts. Those are the ones that are open at the moment. Oh, there's the closing transaction there. So sold those for 260. That's the April 67 strike, and then closed them out here for 91. So made a good $400 profit there. And the only current open position is the April expiration 72 strike, which is basically at the money. Again, happy to take ownership if it goes below 72. I'll just reevaluate. I'll sell some more puts if it drops. If it rallies up, I'll sell calls. But overall, doing pretty well. Slight outperformance here as well on this one. Now, the rest of these are Australian shares, so may not be as relevant for US viewers, but the basic process is still the same. Doesn't really matter what the stock is. Woolworths has been a little bit disappointing. It's been down 15% since I opened it. You can see here this trade's only down 4.5%. So again, it's down, but it is outperforming the underlying stock. The initial purchase was at 33.12. So that was the initial assignment. Bought some more at 30. That was another assignment. And I've got some puts at 29.66 expiring this week. Those will get assigned. So that's going to further reduce my cost basis. What's likely to get it assigned with the stock trading at 28.14. So that'll further reduce my cost basis. I've got some covered calls up here at 30.5, which was against this tranche. So overall, I'm okay with the position. I'm really happy to be buying some more shares. It's going to further enhance my yearly dividends, and I'll hopefully be able to sell some call options against that as well to further sort of enhance the yield on the underlying position. Woodside, another one that's been a bit disappointing, down 20%, but this trade's only down $2%, sorry, $283. Looking okay. We're going to get assigned on some more shares here, likely this week, $24.50. Again, it's just reducing my cost basis further, increasing my yearly dividends, and I'll be looking to sell calls on any bounce against this tranche at $24.50. I've got some calls here for June expiration at $26.50 against this tranche of $24. This tranche that was bought at 29 is uncovered. I'll have to wait for the stock to rally back up a little bit before I can sell calls against that tranche. But overall, slightly disappointing to be down, but down much less than the actual stock. So again, outperformance, which is good. NAB is another disappointing one. This one's not doing quite as well. I was a little bit aggressive on this one. Rid of some of these extra lines. Down 15%, I'm down 8%. So not ideal. Looking like we'll get assigned here this week at 38.50. So quite far underwater on this one. We've got some more puts for June at 35.50, which are also in the money. If it drops down to say 30, I'll probably sell some more puts and just continue building that position, dollar cost averaging, and building my yearly dividend income and those great franking credits that we get in Australia. BHP's been pretty good. The stock's down 2.5%. I haven't been assigned on anything yet. Up 3% on the trade. So again, outperformance. The stock's down. I'm up on the wheel. Stock's at 39.62. We've got these expiring this week at 38. So they should hopefully expire worthless. They're only worth about $3 at the moment. I could buy them back, but I just don't really want to. The commissions on Australian options are a little bit high. So, it'd be $12 or so to close that out. I'd rather just wait a day or two for them to hopefully expire worthless. And then I'll look to resell some more puts, probably at the 38 strike again, for April, May or June expiration. But yeah, I'll just wait for those to expire. QBE has been okay. The stock's up pretty nicely. This was started back in September. I need to remember to put my dates up here. Start dates. So the stock's up 10.75. I'm up 9.43. So again, slight underperformance when the stock has a big rally, but overall positive. Still pretty happy with that. These 16 puts expired worthless. Currently got the 19 puts for the March expiration with the stock at 21. Fairly likely those are going to expire worthless this week. And I've got some further puts at the 19 strike for June expiration. So I'll just leave that one doing its thing. Not a lot of time premium there in those ones, but that's okay. That's just sitting there doing its thing. Commonwealth Bank, another one without performance. The stock's down 6.5%. I'm basically flat on the trade. Looks like these 140 puts will hopefully expire worthless this week. I've got another put for 142, the May expiration. I'm not sure if I'll resell another put here. I might just wait and see what the market does. We're in a little bit of a bearish trend at the moment. Yeah, I'll just wait and see. I don't want to overexpose myself here. I've already got some exposure here on NAB and also Macquarie and ANZ. So I might just hold on this one and wait and see what the stock does. ANZ, pretty flat. This is a pretty new trade. It's only been open a month or so or less. So no major update there. Rio's been pretty good, slight underperformance, I guess a little bit disappointing. These were very far out of the money when I sold them, so there wasn't a huge amount of credit there. But these will expire worthless. This one's pretty far out of the money for May expiration, so not a lot of value there. So not much happening with that one. BlueScope up 14%, has had a big rally. So underperformance, and that's, again, what happens in a strong up move. There is going to be underperformance. That's okay. No major update there. Those will probably just get called away for June expiration, so I'll just leave them sitting there. And Macquarie's been another disappointing one, just bad timing with this entry. I did initially sell the puts 216, and let's clean this up a little bit. Wanted to try and avoid assignment here, so I ended up rolling out to April and rolling the strikes down to 210. So I bought them back for a loss, resold for a credit. So received a $60 credit for rolling out in time and reducing the strike price. It is in the money. It's down a little bit in dollar terms, but outperforming the underlying stock. But again, not a great scenario. I'll just wait till April. I'll take assignment here at 210. If it drops further, I'll maybe sell some more puts, dollar cost average, and just follow the same process that I've been using on some of these other ones here that have been going on for a little bit longer. So set our start date here as well. So again, pretty early trade, just a little bit bad timing on this one, but such is life. So there you go. I hope you enjoyed the update. If you've got any questions on any of these wheel trades, on the template that I'm using, or any questions about options in general, or any of the things discussed in this video, please reach out. Thanks for watching and have a great day.